First 3 months of the year are usually the best time of the year for the Johannesburg Stock Exchange. And judging by last year's trend on the top 40, analysts say that there are more gains to be had. However, they caution that share prices are very high when considered in context of company profits.
We're at historically a very high PE level, price earnings ratio level, for companies quoted, leading companies quoted on the JSE. And I think what we have to say there is that we've got to allow earnings to grow into these price levels to justify the price earnings ratios. And maybe we'll see some of that coming through when we get to December year-end profits being announced, and then those will then bring back that price earnings ratio to some extent.
Meanwhile, though, the fortunes of the rand are not expected to improve.
From a technical perspective, I think, as we saw, we've moved from a range between 980 and 1040. Now, that's been there for the last 6 months, just over 6 months. I think now what we're seeing with the rand looking like 1060 with potential to weaken, we may see that we're in a new trading range. Call it the same sort of depth as the previous one. We may then expect somewhere between 1040 and 11 rand as a type of range to see in the short term. Short term, the next 3 months or so.
And even from an economic fundamental perspective, Cruikshank sees no relief in sight.
We're seeing a current account deficit that is worsening, close to 7% of GDP. About 6% is looked as the global level for beware. That above 6% can affect our international credit rating. So that's bad news. That then inhibits our ability to raise international funds, or it makes it more expensive. So that's not a good sign for us. In addition, we've got a growing, almost exploding budget deficit, government budget deficit. And the problem there is as that goes ratcheting up, we've got this twin deficits. And with a twin deficit program, the foreign investors say, we don't like the look of this.
That means foreigners will continue to divest from South Africa. And it's of course the consumer who will feel it most, as the ever-weakening rand continues to increase the cost of imported goods. Gunther Deutsch, SABC News.